Well, unless you've been living under a rock this past week, you've definitely heard something about the Federal Reserve making a 50 basis point cut. The question is, what does that actually mean to the normal person, and how does it affect the home buying process? I'm Realtor Belmore, and I specialize in helping people find the right home for them here in West Michigan. So if you have been curious about what's happening with rates, what's happening in the market, or even what are some of the cool things about West Michigan, make sure to like and subscribe so that I can keep you updated as new videos come out every single week. The Federal Reserve. First off, let's start out with some of the basics. The Federal Reserve, also known as the Fed, controls the Fed funds rate, and this is actually the rate that is used to lend banks money to each other overnight. That's what we talk about when we're talking about raising or lowering the Fed rate, is actually the cost of lending between banks. A lot of you might be thinking, hey Nick, I'm just looking at when's the best time to buy a house. How does that actually affect me? Well, when the Fed lowers the rate, those savings actually get passed on oftentimes to the consumer. Now, of course, this has a very direct effect when it comes to a lot of our short-term lending. If we're talking about credit cards, or maybe car loans, or maybe a boat or an RV type of loan, these are some of the things that are very directly affected when the Fed lowers rates. So mortgages, absolutely. The thing is, they're not as pegged directly to the Fed as some of those other short-term lending loans are. What is more pegged to those direct 30-year mortgage rates is actually the bond market. And when the Fed starts to go ahead and drop those rates, the yield on the bond market starts to go down. And that's the thing that begins to directly affect our 30-year mortgage rates. Now, let's also get specific. When the Fed makes a 50 basis point cut, what does this mean? Well, a point is 1/100%. So at that stage, the amount that banks lend money to each other overnight drops by 1/2%. But what does this mean to you as a buyer? Well, ultimately, that does begin to trickle down into the mortgage market. However, there's not a direct one-to-one effect when it comes to this. And so oftentimes, the mortgage market is anticipating these rate drops and beginning to price it directly in to their rates that specific day. Even now, as we started to see this, most people have not seen anywhere near a 1/2 point cut when it comes to 30-year mortgage rates. Why? Because a lot of those lenders started seeing this cut coming, and they were making those adjustments all the way from the beginning. If you do see a 1/2 point cut, ultimately, what does that mean to you as a buyer? Well, just for example, let's say we're looking at a 30-year mortgage, and if we started seeing that rate at 6%, we might be looking at around an $1,800 a month payment when we start to get into that 30-year mortgage. That same mortgage at a 5.5% rate could end up with around $1,700 worth of payment. So in that specific example, a 1/2 point savings in rate could equal $100 a month or $1,200 a year for that specific buyer. It is important to note, however, the Fed rate does affect the mortgage rates, but it's not a one-to-one cut when it comes to these rates. It's not a sure thing that when the Fed drops that rate that you're going to directly see cheaper mortgage rates coming in the next few months. So what's the takeaway here? A 50-point basis cut can definitely help those mortgage rates. However, it doesn't equal a direct drop of a 0.5% when it comes to those rates. So if you are looking to get into a home, this might be the time, it might not be the time, but for $100 worth of savings on a $300,000 home, we have to look at some of the basics of what is it about the move that's important. If you're making a move because, hey, I need a bigger house or I need something else to happen in that process, yeah, it's probably the right time with this basis cut. If you have no intention to move, this doesn't make it cheap enough to just all of a sudden start to up and move. However, one of the things it is doing is the people that have bought in the past 18 months are typically seeing a little bit better rate coming down, and it might be a great time to refinance for that type of buyer. If this helped you get a little different understanding of the Fed rate, go ahead and like and subscribe. That way I can get new videos out to you over and over again. And if you are thinking about searching for your dream home at this stage, reach out to me. My contact information is in the description below, and I would love to help you find the right home that fits your needs and your budget.